How many of you right now are watching the gyrations in this market thinking there's got to be a way to take advantage of this rather than losing sleep? How many of you are hearing how there's so much concern for a drop, and even maybe a minority of traders and investors are thinking maybe we rally after a drop and you don't know which way is up? I'm with you, right? What we're going to talk about in this video is how to use the intraday movement, especially in this season, right? I don't know if it's going to be September or October into November, but the season I'm talking about is the season of uncertainty around inflation and the Federal Reserve's response to it by way of monetary policy. If you don't know me, I'm Raghee Horner, and I head up the Sector Secrets Mastery Room, as well as I'm one of the traders in the Simpler Futures Room. And I'm going to talk to you right now about how I have been day trading since mid-June. And I think I'm going to stick with the process that served us very well. I didn't trade any daily time frames for almost a stretch of 6 or 7 weeks. And all I did was focus on the setups that I'm going to walk you through right now. The S&P 500, 5-minute, and the daily time frame. By the way, the 5-minute chart is my preference for decision making when I'm day trading. It's not that the 5-minute is magical, it just works for me. It's slow enough that I don't feel like I'm always dancing backwards in high heels, and it's quick enough that I can take advantage of movement through my favorite day trading window. That favorite day trading window is from 9:30 to 10:35. So yes, just barely an hour. I'm doing most of the best day trading opportunities. I'm seeing them and taking advantage of them through that 65-minute window. I realized that 10:35 cutoff was serving me very well in the beginning of June, and we used that cutoff for most of the summer. And really, as I look at my trade results between 9:30 and 10:35 Eastern, and after 10:35 Eastern, I really need to, as long as we're in this season of confusion around the Federal Reserve monetary policy, it's going to make sense to focus on this. This is where it's working best. The tools on my screen are the HPMR. This is a tool that I developed just over, 10 years ago, using historical price movement ranges and a simple arithmetic formula to post on a chart where the historical volatility support and resistance is from hour to hour. The other tool that I have on my chart is something everyone can use, and that's a simple 21K 3D slow stochastic. It works fantastic for overbought, oversold. Listen to me now, believe me later, it just works. Another thing that you'll notice I always keep is the daily time frame, even when I'm day trading. And the daily time frame told us that there was a slight directional bias to the downside on the morning because we were below what I call the line in the sand. It was 39.73 3/4. So as long as we're below that level, we're a little bit more bearish than bullish. Well, the bell rang and the market shot up. Now, a lot of traders like to buy into that momentum. I chose not to because, well, I can't. That's not part of my process. As soon as we got up into the resistance of that HPMR, this is where we look to either get long puts in the SPY or short the S&P futures, right? Either way is going to work. It's really up to you. This is the futures video, so I'll say ES or MES is great. But look, if you can look at ES or MES, you could trade options, get long puts in the ES, or you can even get long SPY puts. But the whole idea is, however you want to do it, set yourself up for a move to the downside. So the next thing we had to deal with is, where are our first targets? Well, the first target that we took advantage of was pretty much right in the middle of the range. That was T1. The second target was as we were moving down to the support of that same hourly price movement, HPMR, volatility and time-based. So this is support, and it also was our T2, right? And that's the kind of trading I like to do. Now, 10:35 is a cutoff. I'm telling myself as much as I'm telling you all. I had other trades after 10:35, but they did not work as well as the ones that I took between 9:30 and 10:35, this being one of them. And this wasn't just the S&P. This was the NASDAQ that did something similar as well. And then also just kind of shifting gears, because I don't want folks thinking, oh, it's just indices. No, we actually took a setup in the euro as well, off the same type of logic after 9:30, looking to take advantage of movement off support, again, taking advantage of the middle of the zone for our target. Not huge moves, but think about the fact that we're really just trading a 65-minute window on a 5-minute chart. That's what makes it so great. If you've got about an hour, maybe an hour and a half in the morning, this is a strategy, is the set of tools and an approach that I know I need to make sure, even though I have a lot of other things I can be doing, I need to focus on this. I need to focus on this one thing until at least Wednesday, get past whatever it is that Jerome Powell wants to tell us, and then see whether or not we're still going to be in this sort of cyclone of confusion, see these kind of gyrations, and maybe we just keep trading this first hour of the day and calling it a day. Look, if the rest of the day is not presenting good risk-reward opportunities, why force the issue if we can get 2 or 3 winners by 10:30, as I did today? In the premium video, I'll get into what I did after 10:30, talk about some risk management, talk about important decisions I think we need to start making in terms of our cutoff for day trading, but you're looking at my day trading approach right here. If you have any questions, feel free to leave them in the comments. Thanks as always for listening. Think short term, gang, because if nothing else, if the longer term is concerning you, is confusing you, look, I'm concerned about the long term, and I right now don't know what Jerome Powell is going to say, but I know that I can trade in an hour-long window, start fresh, start flat tomorrow, and do it all over again. And there's a lot of freedom in that until we have a bigger, clearer picture ahead of us. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.